Over the last few weeks, China has been cracking down on cryptocurrency trading in a move that has caught many by surprise. This is due to the fact that China has the world's largest concentration of Bitcoin traders, and the government had tolerated the crypto trade for so long. While the crackdown of Bitcoin was expected and many national governments were already putting certain restrictions in place, many didn't expect the Chinese government to be the first to make a radical move to clamp down on the currency completely. In this video, we will explore some of the reasons why the Communist Party of China chose to crack down on Bitcoin and the potential ramifications of such a move. China has been a hub of cryptocurrency trading and exchange. Since 2017, the Far East nation with the world's largest population had witnessed a rise in Bitcoin trading, which continued consistently for years. However, within the last 6 months, the volume of cryptocurrency traded in the country had started to witness a sharp decline. Records for this year is way down from last year, and there is only one reason why. The government has put measures in place to restrain the trading of Bitcoin and other digital currencies. This came after the government started putting pressure on banks and businesses to stop trading and accepting Bitcoin as a means of exchange. This move created even more of a negative impact after the vice premier of one of the regulatory agencies, Liu He, made it public that the government was going to crack down on Bitcoin trading and mining. This announcement caused prices to drop sharply as the price of Bitcoin dropped below $32,000 from the $44,000 it was trading only a week ago. But why has China reversed course suddenly? For years, advocates of digital currency had speculated that the country was going to be the first country to go fully digital before the West. And from the evidence on the ground, that appeared to be the case, as many had accepted the currency in China as a medium of distribution and exchange. However, the decision to crack down on Bitcoin is not without reasons. Now let us review some of the possible reasons why decision makers chose to take such a drastic action. A digital yuan. One of the possible reasons for this move may not be unconnected to the rumors that the government plans to introduce its own digital yuan. Being one of the first nations to accept Bitcoin on a large scale, policymakers may have seen the potential of digital currency. Amidst the never-ending economic battle with the US, the Chinese government may see digital currencies as a way to gain financial supremacy over the US by gaining a stranglehold of the global digital currency supply. This move could also weaken the demand for the US dollar. However, the government does not control the supply of Bitcoin, but if they were to phase it out and come up with the digital yuan that they have control over, their geopolitical aim may be achieved. Already we are seeing the effects of this move as crypto exchanges in China have begun to scale back operations. Recently, Huobi, a major cryptocurrency exchange in China, announced that it will stop selling mining machines to new users in the country along with other related services. OKEX, another major exchange platform, has followed suit. Many Chinese-issued currencies can no longer be exchanged with the Chinese yuan. Financial instability. Another possible explanation for this new move may be due to the instability caused by Bitcoin trading. For all the argument in favor of Bitcoin, many advocates understand that it places pressure on existing financial assets, which could lead to market instability. One of the major signs of this is capital flight from China. Due to the decentralized nature of digital currencies, the Central Bank of China is unable to control how much leaves the country. This leads to loss of government revenue and pressure placed on conventional financial assets. Strain on energy infrastructure. Bitcoin is mined with supercomputers that consume a lot of energy. With the rise in popularity of Bitcoin, the demand for new Bitcoins and other digital currencies has gone through the roof. An increase in mining activities has placed a strain on energy infrastructure. If you recall, China experienced major power shortages over the last few months, with many homes left without power amidst freezing temperatures. Although mining is still in full swing in parts of the country like Inner Mongolia, the crackdown on mining has already begun in major cities. Price volatility. Another major reason has to be the price of volatility of Bitcoin and related currencies. Cryptocurrencies are known to be highly volatile, which creates a price bubble that can easily go bust at short notice. Now, this is at a variance with the government financial policy of financing the real economy. Over the last 12 months, Bitcoin has witnessed a sharp 300% rise in value, which is unsustainable. This led the European Central Bank to warn that Bitcoin had a bubble that had outgrown the tulip bubble of the 17th century. Due to the government's policy of helping the real economy grow instead of controlling it, the government's move was to be expected sooner or later. The crackdown on Bitcoin mining will not affect Bitcoin's supply though. Since Bitcoin algorithms release new coins based on predetermined rate and not the number of miners in the market, the supply of the currency will remain constant even with fewer Chinese miners. So Chinese traders will have access to trades via offshore trading platforms if they use virtual networks that bypass the restrictions placed by the government. The only difference will be that they cannot directly buy digital currencies with the yuan. Peer-to-peer market trading is quite difficult to track, so Chinese regulators will have a hard time tracking and curbing real-time trades. How does peer-to-peer trading work? Very simple. The buyer sends the yuan to the seller using a banking app or online transfer system. Once the seller confirms the payment, he or she gives approval to the exchange to release the coin to the buyer. This practice is difficult for the authorities to track since officials can't demand an invoice for the millions of transactions carried out in the country per second. It was only a matter of time before the authorities clamped down on digital currencies. If you understand how the levers of power works in China, this move will be all the more clearer. The Chinese economy is highly marketized and controlled by the state. Ensuring full control over Chinese finance is not only an economic policy of the Chinese Communist Party, but also a must for the continuous survival of the communist leaders in the country. If the political leaders are able to maintain a monopoly over finance, they can crush dissent before it gets out of hand. However, it is important to note that China is not the only country with plans to crush or monopolize digital currencies. But the new move should not be confused with a monopoly of privately mined bitcoins. While Bitcoin is autonomous and not under influence of any government, the Chinese digital yuan will be controlled by the authorities. So the end game of the government will be to discourage the use of Bitcoin as a means of exchange and to supplant the digital yuan in its place. This will make it traceable and easy for the Chinese authorities to manipulate in line with their economic and political agenda. The crackdown on cryptocurrency will have far-reaching consequences that no one can accurately forecast for now. No one can say for sure if a plan of the Chinese authorities will work. However, if it does work, this will make cryptocurrency an unattractive virtual currency because it will lose the autonomous advantage that it currently enjoys. As analysts continue to evaluate the impact of government interference, we will continue to monitor the actions of other national governments to see if they take the same approach like the Chinese government has taken. That's all for today's video. For more interesting topics, make sure to subscribe to our channel and hit the bell to turn on notifications. Thanks for watching.